Good morning, it's Harvey Jackson. Just going to get through some news items. Extension by Trump to April 7th. Not a surprise if it gets pushed even more, but we'll see if the taco trade actually continues here. Um, we'll see. And the market doesn't seem to be believing it, so maybe the oil market is maybe a little bit smarter than the rest of the market. We'll see here. So Trump extends the deadline by first striking Iran's energy plants to April 7th. So just another push down the road here. Iranian officials calls U.S. proposal to end the war unfair. Um, and that's just, the headline here. Trump says talks with Iran are going very well. And obviously he's talking to someone, but whether they're going to be in control or not, it would be the other case. So Iran says it has arrested spies linked to Mossad as well. Um, just changing gears, I was looking at this with a client yesterday, and you look at these crush margins; they're through the roof, and even more so. Like you go compared to last year, you're looking at half the margins that were made, and again, it's a calculation based on soybean oil and soybean meal as an extension, but it's still saying that there's a lot of money getting made here. I don't know why that Cargill crush plant doesn't get pushed to uh, get finished, and even the other LDC. Why are they not finishing up? You would think with this kind of margin, they would be pushing pretty hard to get that crush going. But I don't know. Sometimes these big companies are a little bit brain dead as well. But just the export pace here is the one that I'm paying attention to. We did export decent enough amount of canola, and that could be trying to make sure that they use up the exports or the get that canola in place. Depending on which countries, of course, there's no indication of where that's going at all. Not until maybe 2 months from down the road where it went. But the other one that I do want to highlight is wheat is way ahead of pace, which is good. But you can see the canola is quite a bit behind last year's pace, and this year we've got a bigger crop and slower pace. But crushers are doing their job. This is from left field. The Mars report. They were talking about the assumptions made here. Seeded area is estimated to be 7% higher on rapeseed. So that just that increase all by itself could have some reliance on getting product from other countries decrease some. But my call out is if you have a winter planted crop that's 7% higher, what didn't go in, and it's very likely wheat. But that has not come out or been assumed yet either out of the European area. India's 2026 crop seen higher but below estimates as hail hit the crop. So their likelihood that they're going to export any wheat, and they're not a big exporter at any time, so they're always trying to keep government stockpiles. Just uh, uh, put together just some more minute by minute stuff here. What's going on? The Iran targets Saudi capital, hits Kuwait port as Middle East tensions surge, and it's still keeping the fuel prices and the crude oil prices high. Quick look at the weather. This was a couple of days ago now, but the record temperatures got hit. It was just all over the place. It big, large number with all the heat that had happened there. Now, there's an area here that would be of concern that we should be paying attention to, but there's expanding chances of rain in the west, but looks like it's going to be very active going into the corn and soybean growing areas, the main ones anyway. Here's your snow band that's been accumulating over the last week. This is a long range forecast, but it does look like North America is maybe okay, but there's going to be some other areas that are, um, it's not going to be as ideal as last year by the look of this, that's for sure. Quick look at the markets here. Canola is up $2.80, and that gives you a price at 7.32. November canola is 7.38, up $1.80. Rapeseed is down just slightly at 501.75. Soybean oil is up another 29 points at 68.31 a pound. Palm oil up 38 ringgits at 4,613. West Texas crude oil is back up $1.69 at 96.17. Brent is up $1.90 at 109.91, and your New York Harbor diesel fuel is at 4.30. Soybeans are up 3 1/4 and your wheats are up 2 and 4 cents, depending on which class. And the Canadian dollar is down again. Just quick look here, you can see the market is respecting the trend line up, uh, trading pretty decent on the front month, and then on your July, I put in snapped in a couple of lines here just to, you know, it's in this wedge for sure right at this moment. Now it looks like it could be breaking through that, and that could put us back to that high that was made back in June last year at just shy of 770. Now here's your November contract, and it's pushing new highs at 737 right now. So we'll just see if that can continue. Rapeseed, it's actually going the opposite direction. Bigger crop and favorable growing conditions over there. Soybean oil futures, nice push up higher. Still not beating that previous high that was made 2 weeks ago, but it's sure not far from it now. Just a look with farther time going back here. So you got 2022. These soybean oil futures were a lot higher. We're in the 70s and the high 80s as other peaks, right? So soybean approaching this, uh, I would say, ceiling, and if it breaks through there, we definitely can get back to that $12.40. Soy meal futures, again, giving it a bit of more of a time horizon. Nice increase that we're seeing here. Crude palm oil, just to look back, uh, we're right at that value where August and November kind of timelines where we made those peaks, but still a little ways to go to get to the previous October, November in 2024 values. Here's your crude oil leg up here, but when you get back to 2022, it still hit higher highs there yet. This is just just by the month so far, so you can see how this has still been trending upward here. This is just a comparison between New York Harbor diesel fuel futures have increased 63% on the month, and your crude oil is increased 48%. Here's your diesel fuel futures going back to 2022. We are at that value, and looks like if this continues, war continues, we're going to beat those values. And I think it's prolonged. It's going to be a little bit longer. I just put in some more moving averages here, and we're through the 200-day now. Some of the other indicators here, but it looks like we could be continuing to fall here. And the opposite's happening with the U.S. dollar, but it doesn't look like it's going to make any newer higher highs there. Wheat looks like we've got a chance of breaking out of here. 5-day increase in futures, which is fantastic, and looks like we could be trying to break out of there. But it is Friday, and Fridays are not always up days. More often not. Same thing with your new crop as well. So still looking at targeting that first level at $7, and I am thinking now that that might be the only target we put in for now. And that would be pushing it into November, December kind of a timeline delivery. And if you want delivery off the combine, I would suggest just putting in your $8 targets, and they're likely to get hit at some point here. Kansas, a nice push up to that same sort of resistance there as well. Try to push through here. Your milling wheat doesn't have the same kind of trend. It looks like it's actually going backwards. Corn looks like it's supported here. Um, and like I said yesterday, it looks like your live cattle and your feeder cattle are both getting caught in a wedge. And that's all I have here.